Okay, good afternoon guys. My name is Steve Ruffley. I own Tradermaker.com. I'd like to wish you all a happy new year. Here we are again, quite an interesting open to 2013, the trading we've seen. Obviously, a big jump in the stocks and the dollar with the Fed announcing the fiscal cliff is seemingly no problem at all. So if you've ever read any of my commentary on FX Street, I've pretty much discounted this notion of a fiscal cliff for quite some time. It's just like everything else. It's just scaremongering tactics, to keep people in that fear, to keep control of the economy. Very much like the debt ceiling situation we had last year. Again, there's nothing new. The debt ceiling's been raised, plenty of times in the past. It was always going to be raised. Very much like the fiscal cliff. The Senate was always going to get together and make sure that we could deal with this and that we didn't suddenly find ourselves in a situation we couldn't get out of. So no real surprises to me. What we are seeing, obviously, is though we've seen a big gap now on the S&P, which, to be honest, in my analysis of my views of the S&P, I still see more room on the downside. So I'd be very surprised if that gap wasn't closed within the next couple of weeks. So again, still fairly negative on my view for the S&P, and in the short term, not overly negative, but I still think there's a lot of room on the downside before the market's going to stabilise and perhaps move sideways. So again, it's all about building your opinions up and weighing up the fundamentals with the technicals. Just because the Fed say that we aren't going to hit this fiscal cliff and it's going to be averted, doesn't mean that there won't be further ramifications, this year. All right, guys. Well, we're going to crack on with the trading clinics. We were kind of just getting together last year and putting things into format. So what we've got now is we've got a finished, defined package, which finally, I know after weeks and weeks of saying it, you're going to be able to have for yourself. So everything you see on my screens today, you're going to be able to have. Yep, so you can set your own MetaTrader with a simple installation file. It will look exactly like this, and you'll get access to all the things that I look at on a daily basis. So there's no one else out there offering this kind of stuff for free. Certainly nobody who's a small entity like myself. Took a long time to put this into practice, guys. It's cost a fair amount of money. This is basically 10 years of my trading experience and my views of the markets. So again, I've got all your email addresses. So after this, I'll send you an email. If you're interested in following the trading clinics, what you'll be able to do is download this and then be able to follow all the profiles and setups I have. Again, viewing this in real time. So we're going to focus today on the euro-dollar. So obviously we've had some figures out of the US. We've seen that the ADP, which seems to be a precursor of the non-farm payroll sometimes, is quite a bit higher than expected. So what's that going to happen to the situation in the US and the jobs? It's obviously good news. Non-farm payrolls tomorrow. Again, if you watch my live trading session last month, I did call the higher than expected non-farm payrolls. I was one of the only analysts to go out there. My low range was the top end of most people's expectations, so I wasn't surprised by the higher than expected non-farm payrolls, and we made good money off that. Are we going to see a stronger non-farm payrolls tomorrow? I'm a lot more conservative, to be honest. My range is more in line with most of the analysts. I'm expecting a figure around about, I'm guessing around about 135,000 tomorrow. But we'll have to see. There's no point always trying to preempt the data. We've got to wait for the data to come out and then trade accordingly. So that's another exciting thing coming out tomorrow. Obviously, we've seen the jobless claims higher than expected today, so we saw a little bit of a sell-off in the euro versus the dollar. But again, the markets seem to recovered. So what we're going to do now is just go through what I think is going to happen in the euro dollar. And again, as I said, I'm going to back up everything I do in my live trading clinics now with my own money. So I'm going to start trading in these sessions and putting trades on to prove to you that what I say to you is what I believe, and also backing up with real money trades. So none of this, I'm a professional educator, all that kind of stuff. I try and stay away from all that kind of stuff, guys. I'm a trader just like you. And I've learned in my own way, and I bring these tools to the table to let everybody have access to all this information that's out there. So again, these trading clinics are quite unique. Again, I'm passionate about what I do, and I'm passionate about the market, so I try and bring that across in these trading clinics. So you have to bear with me, guys. Sometimes, again, I will go off on tangents, and we can discuss anything. So I try to keep these sessions this year a bit more focused. So each session that we start with, I'll do a bit of market commentary about what I think is going to happen in the US, what's happening with regards to figures, and then we'll focus on one product. Then I'll open the forum up, and we can talk about any particular product we want. So try and use the chat window and the Q&A window if we can. Okay. So again, guys, keep putting your questions through. I'll come to them in a minute. Let me just go through the euro dollar as it is now. We'll take some questions. Then if I see a good opportunity, okay, I'll talk you through it and I'll put a trade on, and then we can go back and answer all the questions in the chat window now. All right, guys. So when I talk about how we trade the markets, I'm going to tell you right now, openly and honestly, that there's nothing on these charts that aren't available to everybody. There's nothing clever here. There's nothing that nobody doesn't have access to. All I'm doing is presenting it in a way that's structured. The way I teach trading is that we have to understand where we are in relevance to the market. Okay, so that's why on the left-hand side we have the weekly view. Okay, so this weekly view is overlaid with monthly levels of interest. Okay. So all these dotted blue lines are monthly, so that's a higher time frame than the weekly. On the daily, we have our weeklies and our monthlies. Okay, so it shows us where we're trading in relevance to the overall key levels. Okay, so on the weeklies, we can see the market's moved upwards. We're well above, interesting levels of support. We don't see resistance until here at 136670. Okay, so that's saying that if we continue the up move, the market, on the weeklies, will look to hit this monthly period of interest. So very much on the dailies. The great thing about MetaTrader, guys, is all this information is freely available to all of us. Okay, I'm just presenting it in the most efficient way that I've found. So we can just open it up. So again, a nice view. So you've seen the market has rallied, okay, retraced, and I guarantee again, guys, I'm a big fan of Fibonacci. If we do a Fibonacci retracement, okay, from the low of this move to the top again, no surprise though, guys. The market's retraced to that 50% point. So that's dailies, guys. Key daily data. I can't make trading any simpler, any clearer than this. It works time and time again. So the market's rallied, found a high, made a higher high, but couldn't hold on to it. 1, 2, 3 red daily, candles, hits the 50% retracement, finds good support there, and then makes a higher high. Okay, so you can trading in relevance to the weekly, daily, monthly levels. Then what we do is we break it down into the smaller time frames. So the smaller time frames here, and I'll never look on a lower candlestick. So that's what's happening right now. Okay, that's just telling us the noise. That's telling us what's happening in the market. Higher time frames on the smallest time. So monthly closes from the candlestick formations to tell us we're looking that this euro dollar is bullish. The RSI, as it usually is generally overbought below the 30 mark, oversold is above the 70 mark. Generally, a lot of the RSI, positive or negative. When we do, another indicator that I don't use that much, here again, is opposite, and that's negative monthly, negative weekly, but positive, guys, is build up what's happening now. If you're looking at these, each one of these, so we're only looking at a few hours worth of data. Doing is we're looking with, on the left hand side of our screen, weekly, daily, monthly, data. When you think about a monthly candle, how much data, so the significance of it is very important. So we drag this, okay, our 5-minute candles, and we see the month sentiments all built up here. So you start to see, really, we've got, just about the same green as we have the RSI telling us that we're in the middle of the range. What we do is build up, with the fundamental data, with our averages, what we're going to do at this particular point in time. Because everything that's happened in the past is gone. We have to try and predict as traders what's happening in the future. What we then do is move along to the middle point. So the hourly and the 50, all our focus should be when you're intraday trading. Okay? Look at 50 candles, because every 4 closes you get an hourly. Your weeklies, dailies on your left hand side, your 5-minute noise and volume, volatility on the right hand side. In the middle, where your focus should be, where you're going to be looking to put these trades on. Right, so in the last 15 minutes, come out, the market couldn't make a lower low. These blue levels here, these big fat blue lines, now these are the smallest time frames that I'm willing to use on MetaTrader. These are based upon the minute extremities of the market. So these blue lines on the low will show us the lowest time on these charts that has been hit, yeah, and not opposite will be the high side. So that's what I call current value. Current value for me in the euro dollar is on the high side 132930 and on the low side 130813. Okay, so when the market's moving up, okay, and finding support, then the market's going to hit these daily and weekly levels and eventually to tie here. Okay, that's how we do it. And then when we're trading below, again we'll look to touch the low point, yeah, of volatility of current value conversely. So again, guys, you know, this isn't information that's available to everybody. So these blue lines are the lowest time frames on the higher time frames, and these dotted lines are the higher time frames on the lower time frames. Okay, so don't get confused. Okay, it's not say no more or trying to overcomplicate the trading. Solid lines, frames on higher time frames, dotted lines are higher time frames displayed on lower time frames. So you're starting to get an idea of what the market's doing by using, you know, the upper and lower time frames together. You can see where we're trading in relative towards the low end of value here. So the market has up emphasis and it does down. Okay, so we try and tie that in with our higher time frame view, and then try and understand if we want to be buying the euro dollar now or we want to be selling it. So we move back to our 15-minute candles. Now 50 candles are what I generally look at every day in every product I do. Now you can have this setup. You know, this way of viewing the market is the weekly, daily. Yeah, that's how you should look at any product. And again, it's just in my opinion, guys, in my view. But what we need to do is understand what we're trading right now. Trading right this minute what we're going to look at. So for me, shorter time frame volatility, yeah, we're seeing, okay, on the volume on the shorter time frame. So let's see what that means in our 15 minutes. Okay, so we see these long wicks. Okay, long wicks. The market's tried to push down, but it couldn't find them lower closes. Bottoms here, spot 30951. Then the market, day moving average. Just a it's just standard MetaTrader setting is over optimized or based upon the standard MetaTrader settings. Okay, deviation or anything like that. Okay, so 20 periods, because there's roughly 20 trading days in a month, and that's one I'm comfortable with. You can overlay a 50-day or 200-day moving average, whatever. It doesn't really matter. Whatever works for you. Again, I try to keep the charts as uncluttered and as simple as I can. So what I'm going to be looking for in the 15 minutes then, if I think, as I've said, I see more room on the upside because we're trading on the hourlies, we're going to make a look, you know, there's more room, okay, on the upside. So what we'd look to do initially when we break through here on the hourlies, but we haven't, so it doesn't matter. We haven't extended that far above it, so obviously your next target is the high of this candle here in the hourlies. Put that on now, just to show you that it keeps working. Of that retracement, a 131249, your initial target. So on the 15, on the moving average now, okay, so this could be the perfect time to get long, okay. We're outside the moving average, 1388, and then the market to move above that, and then get towards these higher time frame levels here, okay. So that's how we're starting to build standing. Noise, volatility, but with our high time frame views. Our 15 minutes, so couldn't make a lower low, retraced higher, higher high, higher high, trading above the moving average, and our overall target, so the 50% on the hourly retracement of that move, but an overall target, if we break these highs here, continue higher, then we're going to test 1386. And we, you know, again, we might see a little dip in the market move, but you know, if it's going to move moving average, and again, all this big candle body here, shorts are going to get to the market, then the market's going to continue to move higher, and these are our targets here. Okay, all these dotted lines on the 15 minutes. Right, guys. Well, I've talked for about 10 minutes, so let's that window now, and just and let's just see if we can answer some questions. Alright guys, above this moving average. Okay, so the moving average, viewing it on the 15-minute candles, but that is based upon 40 of trading the last 20 periods. So we find good support above the average, then the market's going to move higher. So we've just seen 3 candles printed on the 15 minutes. So you might see some retracement. That's what we always have to understand. If you're going with the momentum, the market sell off and then move up. So what I'd expect is that volume or momentum in the market right now. So as long as we don't make and close below the low of this candle in 15 minutes, okay, at 131037, the market should range sideways, find support on the moving average, and then move up. So if you're going to set your stop in, okay, and you're looking for, you want to be going long. If we keep above this level, should be somewhere around here, somewhere around 1.30893. Below that, then we're going to be hitting that low of the current value. Okay, so if you put your trade anywhere around here and your stops here, yeah, your target is going to be initially 31388 level for one trade. Okay, you take your distance from your stop and your entry point. Again, you know, your profit is going to be 2 times, a minimum of 2 times greater than that. So as we can see, that's why it's always difficult. So this is good. This is what I would like to see. Go long, okay, but I'm always happy when I see the market trace. So what I would look to do is, like I said, as long as we don't close below the low of this candle here, at 131038, I will go long. So we might have to wait for this candle to close before I go long. Stay above this level here, and don't eat it up into too much current value. We're going to then close above the moving average, and then my target to get out initially will be 131388, then moving up to 131449, and then an overall target, don't know if we'll see it today, but maybe around about the 1610 mark. Okay, so we've got 9 minutes until this 50 minutes closes. So if I see that we're closing, say at 131038, and we're closing by the euro dollar. Okay, so that's my view. Okay, guys, it's still iffy. Seems interconnection is, yeah, okay. Really don't know what's causing the sound problems here. I don't know. I'm a bit of a loss. I mean, I've got, like I said, I've got plenty of volume for the internet connection. I don't really know what to. I don't know what to suggest, guys. Can't apologise enough. There's nothing more frustrating than trying to explain things and have to go back. So I'm really, really sorry, guys. And broken lines. So the solid lines are the low time frames. So they're the low time frames, and that shows you. Think what happens on a minute chart, more happening on a minute chart, yeah, than, well, opens and closes than there are on a 15-minute chart, than there are on an hourly chart. So once that volatility on the minute chart starts to come to an end, then that solid line stops moving. So that's your low volatility being shown by the solid line. Now your interest that have already been within markets, points of interest from a day. So where the volatility is ended on a month open or close. Again, I can't go into too many details how I do this. I can't give all my secrets away. But if it's been an area of interest on a monthly, then it's a dotted line and it's blue. If it's a weekly interest, it's dotted and it's kind of that opaque turquoisey blue. And if it's a daily point of interest, then that's a white dotted line. So again, I try and keep it as simple as I can, guys. Okay? So when we're trading and we don't see any lines, they're almost in no man's land. So what we want to be doing is aiming for these lines. If we know the solid blue line, yeah, is one of low time frame volatility, then obviously that's got less relevance than the old. So what we try and tie them in is they're the opposite bound. Blue lines are your entry points because they're the small time frames, you know, extremes of volatility. Then your dotted lines are your exit points, the bits that you want to get out for profit. So you can see now we've retraced the pre-green candles, but again, you know, we're not. This is the art of trading, guys. It's very, very difficult to learn. It's very difficult to get the confidence. But I almost like it when a trade does the opposite of what I think it's going to do before I put the trade on, because that gives me the confidence. I know I'm buying into that extra value. So I would look for these lows, as I said, as I keep saying, to be tested. Below it, then I'm going to that and then look for a close above the moving average to give me one indicator. Then as long as the market then continues to exhibit a bit of a bullish notion, then I know that my exit points are defined. Okay, I take half my trade out of the 1.31. That's a daily point of interest. That's what and the market to test before I get out of that long trade. 5 minutes before this 15-minute candle closes. So this is the pattern to go long now. You've got some people wanting to go short. So we've already got long above the moving average. Then we have pain on board now, okay? Because we didn't wait for that 15-minute close average. So we've had to take that long position offside. So it's all about the timing of your trade, guys. It's timing and understanding where the market's going to go to before where it's going to go on the higher time frames. So when you look at the dailies, yeah, and you look at the weeklies, it's almost like glaringly obvious what the market's going to do. But when you look at the smaller time frames and you see that noise, you start to get worried. And when you see P and L go offside, you start to doubt yourself and you start to get fear. And that's just a part of trading. But managing it in this way and concentrating on your hourlies and your 15-minute charts gives you more focus. Yeah. So you've got your left-hand side high time frames and your middle. That's your meat. That's what you're looking at. Asking what's the settings for the moving average in yellow? Standard moving average, 20 period. That's good to use. It's on your 15-minute charts. Trading your 15-minute charts, yeah, because every so there's nothing to stop you putting your moving averages on your hours. But again, it's trying to keep your time frames as clear. 3 minutes until this closes. The market's trying its best, and it's not. So, alright guys, so I buy the euro dollar. 7 grand in this account, so we're long the euro dollar now. So as promised, I'm backing my theories, my charting experience and my trading experience that were real trades. So I've gone in a little bit early, but again, I've been out and I'm an experienced trader. I've got 3 minutes till this closes. I haven't seen enough volume, enough volatility in this for me, so I'm gonna take an educated trade, close above the moving average, and move to these levels up here. Top's going to be round about here, below these lows here. Traders out there listening to this, I'm sure they could stop me out, but I'm guessing I'm not going to be too bothered about that. I'm trading above current value here, which has 0.812, and then our ultimate exit to go to the other extreme will be 1.32930. That's where I'd expect the market to go to over the next days if the bullish sentiment is going to continue. So again, in the higher time frames, guys, we've seen that the market is trading well above on the weeklies key support for me. But 2 big red candles. You do a Fibonacci retracement from the low to high. I'm sure this is around about the 50%. So try and time it in with all the other things you're looking at. So what time frame is I like to look at the 15-minute charts, Buki. 5 minutes for the volatility. I look at the hourlies for where the market could move to, and I enter based upon 15 minutes. So I've entered that trade a little bit early, okay? So in 1 minute time, yeah, we're going to see a new 15-minute candle open. So I've got into this trade a little bit early. But again, with all these things, guys, there's no point, there's no guaranteed strategy, there's no guaranteed money. Sometimes, you have to just put faith in what you've been looking at, what I've been talking about for the last 20 minutes, and then put in your money where your mouth is. Who knows? These next 15-minute break them lows and retrace and go straight back to, the low. Again, with my analysis, what I've talked about, what I'm feeling, and, what I've been talking about just now, is I feel the market's got more room on the upside right now. So I'm happy to take a long position. So we'll see. Okay, the next 15 minutes, any time now. We're going to take a view. Okay, so we're closing right on the move. Okay, so the market now move a little bit lower. So naturally you'd expect it to test these lows. So again, that's why we've preempted this trade a little bit. because we hadn't waited for the candle to open. But we don't always win. These things are what they are. This is trading. Testing them lows now. Okay, moving a little bit lower. So again, that's the danger, guys. We might have to take some pain on board on this trade because we didn't wait for the 15-minute candle to open above the moving average. So the first thing it's done is look to test them lows. And guys, you can't always expect a trade to go on such way. And generally, when they do go on side straight away, so we could see some pain. And again, to be honest, because I don't have to, I will be looking. Like I said, my trading a large amount of money will probably be, way below these lows here. So if we start to break a low here, then maybe we have to rethink and let current value be tested before we went long again. But right now, I'm expected to take some pain anywhere from here to here is what? Pips. My target is up here. So 3-4 times. Let the market do what it needs to do. But we don't trade on compared to our account size. And these things, we're not scalping. We're looking for a longer term trade. So if we're looking at the hourly candles, yeah? Or maybe could have made the lows. Depends how long I want to keep this trade on for, guys. Forex gal, do you wait for trading like 15 minutes or so? Absolutely. Absolutely. I mean, again, if you want to watch me on Intertrader trade on-farm payrolls tomorrow, come along. I will trade the figure if I think it's out of line and I can get filled quick enough. If not, I'll wait for the first 3 or 5 minute candle to print and trade a retracement. These markets will continue to move after any big event. A lot of people think, you need to have direct market access and you have to be fastest finger first to make money. That's not always the case. Not more by being patient and taking a view sort of 3 or 5 minutes after a big move. Calm down, guys. That is for sure. Okay, the euro problems days. Not quite sure. Well, yeah, I mean, you're seeing, it depends if you're going off the fundamental or you're going off the technicals. We're seeing good ADP, so people can actually job figures is going to come out tomorrow, so the dollar's going to. But will that mean the euro is going to weaken? Remember, a good jobs figure is still good for the European zone as well. The European Union. So any non-farm payroll figure that's good is going to help the majority of stock markets. Something else to look out for. So on the 15-minute, really, what we're looking for to then close above the moving average and then start hitting these upside targets that we've seen. So a lot of downward move. Okay, we've not been able to hold on to the higher highs. So again, on the short term, I'm not saying this is going to be the euro is going to suddenly rally 2, 3, 4 points. But on the short term trade for this particular seminar that I'm running today, between now and the close of today, I see that the market will probably, from my charting analysis, move higher. So your key targets keeps daily highs at 131. Take a screen print, guys. Just press Control Screen now, and then we'll see where the market is trading in 2, 3, 4 hours time. And again, if it's trading below current value at 130813, I'll be a loser. But again, guys, we don't always win it. Guess, and always when you put trades on, because you want to wait for the optimal trade, you want to, but you're still forced into trading with the times. So again, it's very, very difficult figures as well to be ultra cautious because they want to see you make money. And sometimes I want to see you lose money, dying by the sword, guys. I can only bring my education to the market and give them any kind of real credibility by backing them up with my own money. I can speak about, gold's going to be $5,000 or not. But again, guys, I'll write what I say for the event. I'll trade the live event with my own money. If I'm wrong, I'll put my hands up and say, all right, guys, I got that one wrong. Sorry, I'm not always right. but we got out for a manageable loss and we carried on trading. It's a percentage game, guys, trading. It's a marathon, not a sprint. We're not always going to get it right. And you only learn, unfortunately, by losing money and doing things wrong. You know, if you just traded every time and always made money, I'm not saying you find trading boring, but it's satisfying as, you know, getting your chart set up and keeping money from your decisions. Alright, brilliant, Maud, thanks. I was just saying that we're going to obviously just speak to WebEx and see if there's anything we can tie up on their end to see the problems. Alright, that's excellent, that's great. Keep the movement to a minimum. I won't move my body, my head, anything. I won't move the mouse too much, and then hopefully the sound interference won't be too apparent. So sell. Well, again, Mohammed, I'm not here to give financial advice. Trying to do is show you how I built up the chart frames to the low time frames, and say that right now the low end of value. So for me, I'll be buying the euro against the dollar, and that's you. So it's entirely up to you what you do, Hassan. You know, an educational demonstration of how I build charts, my levels from the different time frames, and putting on a trade size and my risk parameters. Moving aggressively offside, but we're not moving aggressively onside. This is where the patience comes into trading, guys. This is what you have to wait for. Okay, so you might see some little downward spikes that give you that niggling feeling that you're wrong, but I tell you what, you could be looking at this trade and it could be 20, 30, 40, 50 ticks onside within an hour's time. Then you think to yourself, oh, why did I get out of that trade? So it's all about managing your expectations now and managing that fear. Okay, so in the 5 minutes, just as I say that, the market's selling off. Okay, so we're seeing some of these so we know what the key support is. So if we start to break down below on these lows here, yeah, then we're going to see people get out of longs. You know, again, like I said, you know, I've got a flexible stop. You know, again, I'm not a rigid trader to build in a position. So we see this on the head shoulders pattern. So naturally we're in these lows before the market then moved up. Again, we did preempt the trade by not waiting. And again, that's why it's important, guys. You know, you learn from my experience and learn from my mistakes. You know, I didn't wait for the 15-minute candle to close above the moving average. I preempted the trade, and therefore I'm having to take some downside pressure. You know, it's above it. I was going to do it. I didn't do it. But it's the difference between trading in front of people live and trading when you just... So I'm going to have to take a bit of downward pain here. That's no problem. Support here and the market doesn't aggressively break through, double up our trade. We can start to buy low. So again, we see the head and shoulders pattern. Yeah, we see the neckline. So as long as we keep above the low end of value, news that's coming to the markets, you know, again, we can see the fine support and move back higher. So by the moving average for that next 15-minute candle, we've had to take, okay, 3082 needs to hold in order to... Yeah, I agree with you. Absolutely. Again, you know, we're all looking at the market in the same kind of way, I think. It's to a nice round level at 13,000. So that's what builds up the views. But if it doesn't start to break these, it's going to spread quite aggressively. So again, the whole point is to keep, you know, keeping within your risk parameters, keeping to your overall rules. Okay, so we preempted the trade and we're taking some downside pain. You know, again, what I think I'll do now, I start being a very aggressive trader and start averaging negatively. I still see my views is the market today is going to hit around the, you know, 131388. So I'm just going to stay long. You know, again, if we start to break below that current key level, then maybe I'll have to get out the trade or I'll have to reevaluate. But for now, you know, we're still trading in a fairly small range. I'm not particularly worried about, you know, this trade being, you know, a few ticks offside, and then that's what you have to wait for. You know, again, guys, you know, you have to stay firm in your opinions. We all have our opinions. We all trade our own money, so don't. But you know, we've looked at the 5-minute charts, we've looked at the weeklies and the dailies. Again, we're focusing on the hourly and the 15-minute charts. Okay, so 15-minute wise, we've retraced the last 45 minutes worth of trading below these lower levels, and then find support at our blue line, our support current value, or once we've previously taken away that last 45 minutes for the last really 3 hours of trading volumes, we're going to find support here. Then the market's going to go above, as I think it is going to do, close above the moving average, and then hit the higher levels that we see indicated on the screen. Maybe it won't. Maybe we get stopped out of the trade, and this isn't a trade, isn't our day. But we've based it upon our higher time frame view, our lower time frame current value, and we've made our view, and we're going to stick to it. It's trading, guys. You know, there's no magic wand. There's no formula. You know, if you look at these trading signals, they'll say go long here with a stop of here. It's exactly what I'm doing, but I'm doing it based upon my trading technique and my own money. So again, it's free trade for me because it's my account. When you're going off signals and people that don't have anything invested in it, it doesn't matter if they're right, it doesn't matter if they're wrong. You'll just remember the times they were right and follow them, and then say, oh, well, you don't always get it right. Okay, and that's just trading, guys. That's just the world we live in. So take a screen print, guys, and again, stay long above this blue line. Okay, and my target to get is 31388, and then I might only get half position out and see if we retrace that big red 15-minute candle that we see here. But again, guys, I mean, this is a new way of bringing trading to the markets. I'm trying to push the boundaries at all times, guys. You know, I'm trying to give you the benefit of my experience, the benefit of my live account, but then also the benefit of my software. There's nothing on MetaTrader. There's nothing on these charts. There aren't the entire world. Okay, so there's no unique IP. There's magical formulas. It's just interpreting the data to everybody in a more clear and precise way. Okay, so we're on the 45 minutes now, towards the end of our session today, but another candle's going to open now. We're going to make a lower low here and hit that blue level, or we're going to range, yeah, and the market's going to find support above the moving average, as I anticipate. Hopefully we'll get the sound situation sorted. I think when I don't move the mouse too much, we don't much interference, so with the setup I've got, we don't have to do that. So, see if we can iron out the sound problems. I'll go and buy a new microphone for you guys. I don't think it's that, because it's a very expensive microphone that I use, but you know, let's find out what it is. The market's finding a little bit of strength now, starting to recover, so remember, guys, I'm still staying long. If you do enjoy these seminars, guys, please send an email to your friends. Let's get the attendance up. The more people we have, the more questions we have, and the more exciting they're going to be. I guarantee that we're going to put trades on, and I can't always guarantee we're going to make money. That, you know, you're going to get more structure and more value out of these, saying what could happen. I'm telling you what I think will happen based upon my account and my experience. Okay, so all them previous gains, losses have been regained. I want to see a close above the moving average, and if we do, maybe it'd be an opportunity to buy more into this trade. But remember, guys, I'm going to keep this trade on for, you know, the next couple of hours. So short-term scalp. Session over and done with today. It's been an absolute pleasure speaking to you. And clinics coming up on Forex Street, so they're all under my page. I'll be trading non-farm payrolls tomorrow, as I always do on InterTrader, so come and join in with that. Anything else, guys? Key at Forex Street. If there's anything you want to see in particular, send these comments through. I can do instruments, I can do anything, I can trade anything, guys. And these setups, these lines, work on every instrument. They're not just for user-friendly and unique. Problems. Hope you've had a profitable start to 2013. Keeping the long trade. Target 131388. Again, guys, I hope you enjoyed it. Thanks to Maud and Vicky and the guys. And I'll speak to you all very soon. All right, guys. So that's and I'll see you all very soon. Have a good afternoon, guys. Thank you.